Return on investment, though, I won't go into because abhi tak aaya nahi hai.
What would this percentage be typically? Like, pay cut would be what, 10%, 20%?
Like in my case, it was like 5%.
5%.
They largely
also-
matched it. I would say I went at a flat.
Okay.
I was moving from Bombay to Bangalore, so if you can factor in the cost of living, that's how at least I justify it. Saying that.
You have some bad experience with DJ Sangvi or something?
Start a fund on a particular thesis, assuming there's a gap in the market. You pool some capital, and you also have to wait 10 years to see whether it's working out or not, right?
What is one thing that you hate about your jobs?
क्यों नौकरी से निकालना चाहते हैं?
Hi everyone, welcome to Konversation with Kushal once again. If you are a person who wants to get into venture capital, understand what is a VC industry, what is the work profile of people working there, what are the average packages, and everything about the VC industry, this is going to be the perfect episode for all of you, where we have called 3 people who are working in different funds like Chirate, Peak Sustainability, and Pravega Ventures, and they are going to throw a lot of insights about the entire venture capital industry. Thank you so much, Chandranil, Adil, and Dhruvin, for accepting my invitation. It's going to be super fun and super insightful to talk to you guys.
Very glad to be here.
Glad to be here, man. Thanks for having us.
Thanks. Perfect. So guys, let's start off with a quick round of introduction of the 3 of you. Maybe we'll go alphabetically. Adil, Chandranil, and Dhruvin. Also, one rule to remember is that don't give me a very resume-oriented introduction. You have to mention something which is not there in your resume as well.
Great. I'll take that as my cue. Hi, everyone. My name is Adil. As Kushal mentioned, I work with a fund called Peak Sustainability that focuses, as the name goes, on sustainability. So off resume kind of introduction to me is I never had any plan of getting into VC. Happened completely by accident, and happy to dive into details on why it happened and how it happened. But just a little bit of my history and kind of what got me here. I previously worked in investment banking at BNP Paribas, the French bank, and then spent a little bit of time working for Barings, the private equity fund in Hong Kong. Spent most of my education outside India. Spent my undergrad in the US. Did study for a bit in Hong Kong, and then also did my masters in New York and Columbia. And kind of how I ended up here is, I think my focus was to kind of get into a very exciting career, and I think VC doesn't disappoint in that. So we'll dive into more details, but that's kind of a little bit about myself.
Sure. So what have you done in your undergrad and postgrad in USA?
So I did my undergrad in economics. Kind of a nice Indian boy. Kind of never really was cut out to be an engineer at the time. So economics was the only other option. And I did my master's and my MBA.
From which university?
From Columbia.
Got it. Fair. And then after Columbia, immediately you worked in which country?
Then I moved back to India.
Okay, so you came back to India.
Working, yeah.
So when did you go to Hong Kong then?
That was before Columbia.
Okay, that was before Columbia. Got it. Perfect. Thanks. We'll move to Chandranil.
Hey everyone, so I'm Chandranil. I have a bit of a conventional, may not be suiting the audience, but I did engineering, which possibly a large part of the Indian youth does. Did that in bits, was there for about from 12 to 16. Did electrical engineering, but one benefit or a good point about my alma mater is that it allows you to explore beyond your majors, right? So at the end of first year, I realized that possibly engineering was not my cup of tea, and I did some of minor programs. I did about a politics, economics, and philosophy minor, and also took up a lot of economics courses, which kind of picked my interest in the whole economics and banking space as a whole, right, like the finance space. And post that, I interned in JP Morgan. According to JP Morgan, spent about 5 years spread across capital markets and coverage there, right? And then also was stationed in New York for a couple of times. And then was at a pivotal crossroads in my career where I had to decide whether to go for an MBA and VC or move to a VC. And I chose to move to a VC, right? So it's been about 2.5 years at Chirate. So yeah, that's been a gist.
Got it. And again, what was your cost of education and the ROI? The reason I'm asking this question is because a lot of people have this calculative mindset of spending this much on education and getting first salary of more than that. So I just wanted to know that number for everyone.
So I am net positive IRR.
Got it.
If I were to put it that way.
Proper VC background.
So I spent like about 10-12 lakhs for my undergrad.
This is across all the 4 years.
Yeah, all the 4 years.
Okay.
My first job pay scale was like at 12. So
Got
net
it.
in the first
So
year.
what was the
itself,
first salary?
First was 12 lakhs.
12 lakhs. So like 1x kind of.
Yeah. In the first year itself, I was able to like net.
Got
of-
it. And
not including
what is the
taxes.
average package which people usually get at BITS Pilani? You were from the
So
Pilani campus itself?
I'm from KwK campus.
Okay.
But placements, there are differences in the companies, but by large, if you look at the average placement,
Got it.
at my time it was the same. It was like average package is about 16 lakhs across all the campuses as well.
Okay.
Now it has of course increased. So
Got it.
average package in bits is anywhere between 20-25.
20-25 lakhs?
Yeah.
Oh, wow.
But it's skewed because there are a lot of tech companies that used to recruit.
These would be paying in crores.
This used to be paying 30 plus. Like
Okay.
a normal company would pay like.
I read one recent article where one folk from IIT Bombay got 1.2 CR package in like as an software development engineer. So that was the highest package.
So the devil lies in the details, right?
Yeah.
So while it says 1.2, the person would have a stock options which would be vesting 4 years. So
Got it.
usually
That's included in 1.2 as
yeah,
well.
that's included
Okay.
in 1.2. So there is a one-time bonus which you'll not get in the next year. So all of that, but you would get like you comfortably start with 1.5 lakh if
Got it.
even the 1.2 crore kind of a.
Got it. Fair. Cool. Dhruvan, over to you.
Thanks for having me, Kushal. I'm a CA by qualification.
We share the same alma mater.
Yeah. And I work at KwK Ventures, which is an early stage firm investing at the Series A stage.
What
in
is
enterprise.
Series A?
Series A is, I guess the way I explain it to people is probably the first growth investment that a startup could get. That typically comes after pre-seed seed, after you've been around for 2-3 years. I guess in most cases achieved sort of a market validation that your business works. Unit economics are mostly in place. So you need to then jumpstart growth. So that's where we typically come in, and investing in B2B ideas, meaning that businesses selling to other businesses or large enterprises, not really B2C. So that's where we focus. Prior to this, I had a long stint in investment banking. Never thought I would do VC. Logical next step was PE, but VC happened. So I spent 3 years at at 2 global banks, one called Investec, the other one called Lazard, doing late stage private equity and M&A transactions, advising on such transactions, both Indian as well as cross-border, meaning that Indian companies acquiring other Indian companies, or global, maybe large companies acquiring Indian guys, or the other way around. So got an opportunity to travel to Australia, the UK for work. So it was a very enriching experience. I cleared CA in 2014, and I think I got very lucky. So I got an articleship, industrial training in IB, actually, at Yes Bank, out of the blue. I was very confused as to what to do. I was very clear that audit and tax wouldn't cut it for me.
What was the stipend at Yes Bank you were getting?
Yes Bank was about third year, it was 20K.
Got it.
Not exceptional, but pretty good.
Right. This is
at
back
that
in
time.
2012-13.
2013, yes.
Got it.
Yeah, so I think that's broadly my journey. I mean, I would call myself an accidental banker and an accidental VC. Never really planned. But yeah, I mean, it's worked out well for me.
Right. And what was your entire cost of education and the first salary, the ROI for you?
I mean, it got paid off in year one many times over. I mean,
Yeah.
of course, CA is not a very expensive degree. Even considering the cost of BCom, I guess it was less than 3-4 lakhs. I guess it's
Got
not much, right?
This
And
includes the coaching fees and all, right?
Yeah, I mean, if you include that, like I can't think of the exact number, but I'm sure it'd be less than 5.
Got it.
Both undergrad and CA. So, yeah, I think my first salary was 9 lakhs.
Got it.
After
This was in
finishing
which
CA.
company?
Yes Bank. So they
Oh,
absorbed
okay.
me after my industry training.
Okay.
I worked there for a year and then moved to Lazard.
Got it. Fair. So I think all of you have that investment banking experience, and then you have switched to VC. Maybe we'll cover the banking experience in the latter part of the conversation. But let's drill down on the VC stint. Currently, what exactly you guys are doing. So if you can explain to our audience, like what exactly is a VC fund and what is your day-to-day profile, so that'll be helpful to start off with.
Sure. So in simpler terms, if I were to just put it, VC is analogous to a mutual fund, where you have investors who are providing capital to the fund manager, and the fund manager chooses a stock that has to be invested. In the similar manner, we have investors who give us money, which we term as GP, which is a general partner. LP, my bad. That's termed as an LP. And then there is a GP, general partner, who is a fund manager.
What's the full form of LP?
LP is a limited partner where they're the providers of the capital, right? And in turn, we invest in the private markets versus a mutual fund manager who possibly does in a public market, right? So the investments that VC does are largely in a seed to a Series B kind of a stage, right? And Series C plus you have growth and PEs coming into place. So that's largely, and again there is a bifurcation on each stage that we come at. What are the points we look at, which I think we can cover it in detail later on.
Right. And specifically like in VC itself, so how big would be your team sizes and how is the work allocated between the team members?
So I think with most investment teams, right, I think just because you manage more capital doesn't necessarily mean that you need to have a larger team, right? So for us, for example, our team is only 6 people, right? And this includes the partners, the individuals that work there, the analyst, all of that. And the way it works for us is because you are part of a small team and KwK kind of being a relatively new fund as well, I think we have a fairly flat hierarchy, right, so to speak. So, and I'll get into this at a later date, but again, you have funds that do multiple sectors, and then you have funds like KwK that are specialized and do one sector. So when it's a specialized fund, right, you have individuals that dive into particular aspects, right? There isn't necessarily as much of a bifurcation as in an agnostic fund where you might have one team that's looking at, 2 individuals looking at fintech, 2 individuals looking at energy, 2 individuals looking at consumer, right? So for KwK specifically, almost everyone kind of in some way is involved in everything, right? And we do have specializations, but that's kind of what happens. You have, different people sourcing deals. You have, relationships that each individual has with different founders, right? Kind of helps evaluate, like your interaction with the founder helps evaluate how the team looks at a particular deal. If you like a deal, it is your job to convince the rest of the team that this is the deal we should take forward. And then kind of it moves into, stages of due diligence, which we can get into later. And then finally, we have something called an investment committee, where once the entire investment team is on board with the deal, we present it to the investment committee. These typically are the fund partners and, one individual from outside the firm as well, who evaluate the deal objectively, and if they approve it, then you have approval to kind of make the investment. Right? So that's kind of how it all comes together. Right. I think the core aspect being is that it's extremely important that individuals kind of spend most of their time diving into the company and diving into the sector, because that is what defines VC compared to other later stage transactions. And as long as you have built that conviction within yourself and the team, that is where you spend most of your time, and then you kind of make that recommendation that we should maybe go ahead with this investment. Because one thing that I think, and maybe they might disagree, but I think the more time you spend in VC, the more you become a skeptic. All right,
Okay.
and you look for red flags in a company, and if there are enough red flags, you want a reason to pass on a company, and it's only when there aren't enough reasons to pass you decide, okay, it's worth
Yeah.
investing.
How many companies all three of you would have spoken to so far? Like, do you have any specific number? For me, it was 600 in 6 months when I was doing my VC stint. Any number for you guys?
So, for me, I would say it would be anywhere in a year. See, totally we see about 3,000 odd deals every year.
Wow.
Right, 3,000 to 4,000 every year.
Hmm.
That's largely, you can say, divided in between like 6-7 people.
And how many deals would go through out of these 3,000, 4,000?
So, roughly in a year, we possibly invest in about 10 odd.
Wow, my God. So
I think that's the case.
Yeah, I think that's
across
the case
board.
everywhere, right? I think
That's the kind of filtration criteria that we kind
Got
of
it.
have, right?
What
And
would it be for you guys?
especially if you're like looking at multiple sectors,
Mm.
right? Like you will look at a lot of deals,
Right.
And if you're again, if you're doing smaller checks, then you'll have more deals. If you're doing larger checks, and every
Mm.
deal that you do plays a very
Yeah.
important role. And sometimes like you kind of take a deal all the way to a very late stage, and then something happens, or in negotiations with the founders, or something comes up in diligence that makes you pull out. So these things take time, right? So you have to kind of be okay with
Right.
doing a small number of deals.
Yeah.
That's
So what is that number for the two of you?
Yeah, I mean, about 10 for us is a good year, 10, 12. which is
Right. And
about
how
a
many
month.
would you have spoken to, or how many would you have?
I mean, personally, so my team is around, I guess, actively people who look at deals in my team are about, I guess, 6, 7 on a regular basis. I personally, since, like, if I at 250 to 300 companies I might have spoken to in a
Got
year.
it.
And yeah, I mean, I did, so far I've done one deal.
Got it. Fair. So that's
That's
a very
roughly the case. Like you'll
Yeah.
you'll see like a one company a day
Mm.
metric kind of, right?
Yeah.
That is possibly a way to look at. And each, so mine is like a 13-member team,
Mm.
investment team, and we again, if you divide the 3,000 by 13, it roughly translates to that 200 to 50 odd
Got
deals per person. Yeah.
fair.
Yeah.
And how do you scout these companies? So, for example, if 3,000, 4,000 is the number for you, so would it be every company will come to you, or you will also reach out to company? What is that ratio, and how do you find them?
So I would ideally classify them in two buckets, right? We have this inbounds and outbounds, right? So inbounds is ideally where entrepreneurs reach out to us. So we have partnerships with accelerators so we participate in seed to Series B bucket, right? So we have accelerators who are in constant touch with us. Or
So what are
pre-seed.
accelerators?
So accelerators are accelerators/venture studios. I hardly see any difference there, but basically they help you in incubating your company. In return, they take like some percentage stake, and they help you in your marketing, GTM, in all your operations, whatever they can help you with, right? And they tend to take somewhere like less than a 10% kind of stake in a company and help them out to just get them rolling, right? So that they have that initial MVP set and all of that take place. This is also accelerator is at the same stage that angels will possibly participate at, right? So that's one sourcing channel, and then we also have other sourcing channels in the inbounds, which could be pre-seed or a micro VC. Start micro VC funds, right, which will eventually become a feeder for us. On the outbound side, we usually have a rolling thesis that we constantly update on. As a result, we scout for which are the companies that are coming up, right? And these we usually scout. It can be ranging from traction to all the way to like scraping on LinkedIn, right? To just get an idea of who is starting up in a certain space. So yeah, largely like I would classify these two.
So what would be the ratio? Like out of 3,000, how many would be inbounds? How many would be outbounds?
So roughly you can say majority for us, because we also kind of tend to pull entrepreneurs, because we have been in existence for almost 17 years, it would roughly be about 60-40. Outbound would be like thesis plus plus. If I look at the deals done, because I can't classify it on a 3,000 basis. If I 3,000 basis, it would be like 80-20. But on a
80 is
deals
what?
done front,
80 is what? Which
80 would be like scoot towards
Okay.
inbound.
Okay. got it.
On a deals done basis, it's roughly, you can say 50-50.
Okay, got it.
Outbound
So
plus
out of the
inbound.
10 deals, 5 would be inbound, 5 would be outbound.
Yeah.
Got it. Fair. And can you also explain like what exactly is like a difference between micro VC fund versus a domestic fund versus a global fund, and like how is the working style and working culture different in all these three funds which is there?
Okay, so I mean, fundamentally, I don't think the process of working for an analyst or an associate in a VC fund, regardless of the fund size and the objective, is very different. Fundamentally, you have to do the same thing. You have to look for interesting entrepreneurs, startups, source them, sort of do calls with them, understand the industry, whether business fundamentally makes sense, whether it'll ever make money, and then pitch it internally, and hopefully it gets done, go through diligence. So I don't think that changes a lot. I guess what changes is, I think on 2-3 levels. I think for micro VCs, so if we start from micro VCs and angels, who are typically the first investors in any company. So how this works is typically a founder might from his network raise some initial capital, whether he comes up capital of his own, of his family and friends, and in some cases, micro VCs and angels will just, on the basis of a paper idea or just a presentation, they will give him money to give him or her money to get the ball rolling, get the initial few customers, figure out what it looks like, because it's very difficult. I mean, there might be something on a presentation, but how it might actually work out in the market when the entrepreneur starts building it out would be very different. So, not a lot of people want to take that risk, right? So micro VCs and angels are typically people who are either entrepreneurs who've been working in the same space, retired professionals, who've worked for 20-30 years in large organizations, who know how the market works. And depending on their network and understanding of the market, they sort of use their personal capital to support entrepreneurs. After that comes your institutional capital. Institutional capital meaning that folks like venture capital funds who've raised money from other people to invest in startups, they typically come in at the pre-seed or seed stage. I would say to complicate it, not complicate it too much, let's stick to seed. So seed is typically the first round of institutional capital. They either invest alongside micro VCs or angels in some scenarios, or they would come after the micro VCs and angels, right? So I would say when there is some semblance of the business forming up, meaning that there's a small team already there, it's not just the founder, they're operating in one market, they may be selling 1-2 products, it's been about 6-7 months of business, there are some green shoots, there is some potential. That's when a seed investor comes in, and they cut that check, they take a particular stake, and how it works is, at those stages, the amount of money that a startup wants to raise is determined by how much capital they need to survive the next 12 to 18 months. Because at that point, they're not really thinking about profitability, or they're just thinking about survival and growing very fast. And in some cases, the objective is to get to the next stage of funding. Because the business evolves, the idea evolves. In some cases, there are pivots, meaning that how the business originally started will change by the time it gets to a later stage. So that is what a seed investor does. And after that comes, you start adding alphabets to the round sizes, rounds actually. So after seed comes Series A, Series B, Series C, Series D. So as Chandranil said, I guess till Series B is what typically is called VC. After that, it starts becoming growth or private equity. So what changes is the round size, the equity stake that the investor would expect, and the amount of what kind of value add they do for the founder. So for micro VCs and angels would typically do a lot more strategic value add. They would probably open doors to clients, initial few clients, because the founder is a newcomer in that space. So they might have industry connects. They will do that. They will guide the founder about what market to go in initially, what works, what doesn't. So they do a lot of business idea validation also. They act as sounding boards for the founder in several cases. Seed is typically the first round of institutional capital, which is also in several cases like a stamp of validation. That if big name fund is coming into your company, then okay, people think that it's a good idea. It might be a massive market, so that does give you a stamp of validation, and gives a market confidence. So for example, if you're selling to smaller customers, if you want to get into larger customers, sometimes you need a big name investor on your cap table. That would also open doors. People would know, for example, if Sequoia is coming in investing in you, people trust Sequoia, they know the brand name, right? So it might be a way for you to get into large doors of large enterprises, for example, right? Who wouldn't typically work with you if you're like a 5% company. It's very difficult to do that. So seed helps you do that. It helps you hire a larger team. Gives you, because the check size is larger, right? So you get a larger runway, a larger team. And then I think after seed, by the time you reach Series A, you're typically at a stage where your business works to a certain extent. Like it's been validated, the numbers are there, etc. And the idea has taken some form and shape, on the basis of which you can start growing sustainably, maybe in the next 1-2 years. So beyond that, typically capital is a very large value add. I think it's a majority of the value add, because ultimately the business has to be run by the founder. So the investor is coming in running the business means the founder is not doing his job. That's not the investor's job. But there are funds that provide other support when it comes to Series A and beyond, in terms of specialized knowledge, because we look at, say, for example, we look at 1,000 companies a year. We know probably, amongst the team, we know what models are working, what are not working. So we can tell the founder that, okay, this is a pothole you should avoid. It's not worth going down this path. It might look good, but it's actually not good when it comes to actual business. And then and I think beyond Series A, you start governance, finance, legal, all that start becoming important. Because you have a larger team, you're working with larger enterprises, you are in several markets. So all the back office functions start becoming very important. So funds also support, like they have their own operational teams. Some of the large funds have their own operational teams. They help set up these functions. They help you hire certain senior people.
This is called the portfolio work, right?
Yeah, this is called portfolio. So I think beyond that, all of that becomes even more critical. So they help you, I think, sort of become a stable, large organization, is what they help you with.
Right.
So yeah, I think that's broadly how the stages differ,
right,
in my view.
So I think just to summarize, so basically micro VCs and angels would come in at a very early stage. They'll invest like a lesser amount as compared to a VC fund, take a minor stake in the company and then add strategic value, and VC funds would be more like putting in capital plus helping with the operational work, which is the portfolio management work. I was under the impression that VC funds just give in capital and in return they'll take a stake. For example, if they're putting in $1 million, they'll take around 10% stake and then like their job is done, is what I was thinking. But I mean I didn't have an idea about like the main work about like setting operations and functions and all of that.
So I think today, if you look at like average entrepreneur age is like 20 to 23. Like not many of them know about compliance or what has to be done to, like, as simple as like opening a bank account, how to do marketing, or what is the GTM and all of this, right? And so it becomes a bit important that VC funds also handhold them to make them just realize, if you were to figure it by yourself, you'll possibly take a year to figure all of these things. Instead, we have like a starter kit or something that will just help you do it in less than a month. So that's the idea with accelerators or any of these as well, to just accelerate your research and just get to the market quickly, right?
Right. But isn't it a red flag here where, let's say, if you're finding a company where there is no compliance, no legal, no nothing, just the founder is there, so isn't it a red flag where you should think that nahi abhi isme nahi dalna hai paisa?
at a seed, it's usually a idea, pre-seed or a seed,
Got
right?
it.
So compliance and all of this comes into place when there are operations. So
Hmm.
you ensure that those are already in check as the operations grow. So at a seed stage, you'll not be able to find compliance or anything because the company is possibly not in existence as well. Like most of the pre-seed or seed when to 2021 these happened, those were just paper plans,
Hmm.
right? So paper plans you can't like really look for
Yeah.
a compliance and all of this, right? So
Yeah.
that's where like we have our portfolio management team to kind of help them move in the right direction.
Right.
So for us, for the 13-member investment team, there's about 15 members support team,
Oh, okay. Got
right?
it.
So which help in the finance, setting up their MISs and all of that is also part of our job. Like investment team also works in tandem with them to just make sure that everything is streamlined.
Got it. So it's a total 28 member team,
Yeah, 28
out
member
of which 15 are just supporting the operations.
Operations of the fund as well as some to the
Okay.
company. So
Got it.
mix of that. Yeah.
I
Got
think that's something that's kind of important for people to. I think most people don't realize that, as you put it, like VC is just not investing, right? Like there is a lot more to it. I mean, just like investment banking isn't just doing deals, right? There is an entire machinery that happens behind the scenes. Similar, like you do have an investment team, but at the same time, VC holding period is 5+ years, right? So there's a lot of work that kind of needs to go into making sure your company is okay. And sometimes, there are founders, either it's because of age or just sometimes circumstantial, where hand-holding is required, right? And I think an earlier question that you asked was, I think, the role of global VCs, right? And I think that's another area that kind of, that I just want to touch on is like, where do global VCs fit in, right? So as I think Ruben very, very nicely put it on, some of the value add that VCs can play. Similarly, as companies in India particularly, right, are kind of setting up as India for the world, right? We've seen a lot of global VCs kind of willing to lend a hand there, right? We have one portfolio company, company called Indra Water that does wastewater management, that very recently closed a round, with a Zurich-based fund coming in, to kind of lead the round, right? And this is because like Indra has aspiration, has already kind of started to work outside India, right? So those connects, the guidance on how to operate in international markets are going to play a huge role for them as they're kind of growing, right? So
Right. No, absolutely. I think that's a very fair point. VC funds have to add in a lot of value. And tell me one thing. So now you guys have like studied so many companies in detail, more than 1,000 and all of that. So what exactly would you ask the founders, and what exactly do you want to test? Like, although I know that it's founder first and then product later, but what kind of questions would you ask? What kind of answers do you expect? And when do you classify it as a good founder? And when do you take a bet?
So, I mean, I think I'll disagree slightly with what you said. I think, yes, I mean, the role of the founder is extremely important, and you have to be able to trust the person, all of that. But, and this is just kind of us because we are kind of a specialized firm. It is extremely important to us on what is being built, right? Like I think, and this is true about most firms that are sort of deep tech, right? Where the role of the technology, the role of the product, right, is a big part of the investment rationale. And given that our focus is sustainability, a really big focus area for us is figuring out that at scale, when it comes to climate, can this company actually make a difference, or is it like a very surface level kind of solution?
What kind of companies have you guys invested in, and if you can explain what do these companies exactly do?
Sure. So as I was mentioning earlier, like one of our companies is a company called Indra Water, right, which focuses on wastewater treatment, right? So essentially is taking wastewater out of factories, kind of treating them and making it into a form that it can be safely disposed, right?
Okay.
That's one example, right? Another company that we have invested in is in a company out of the UK called Polymateria that has developed an enzyme that accelerates the biodegradability of plastic, right? So these companies, I mean, because we are again a sustainability focused fund, these companies are kind of focused on solving major climate issues, right? And similar, like just as we have our focus on climate, right? You have other funds that are focused on fintech or focused on consumers that have very specific mandates on what they want their companies to achieve, and it kind of depends on what the ethos of the fund represents.
Right. And what kind of investments you guys have
Yeah,
done?
so I think just to add to his point, I think fundamentally what I've seen in the successful companies are two things, right? One is the right team in the right market will give you the returns that a VC would desire, right? Any right team in a kind of a semi good market is also decent, but if it's not mixture of these in that matrix, if this anyway falls in the other side, that usually is not a desired kind of return that we have seen historically, right? Because at the end of the day, the VC business is the power law, right? Where your 80% of the returns are given by just 20% of the companies. So we have these two terms called founder market fit and product market fit. What it simply boils down to is whether this founder is right for the market that he's going to build in, and whether the product or the offering that he's offering has the potential to scale. Fundamentally, it just boils down to those two questions when we are entering it, right? And given these are in place, and there are various ways that we'll analyze whether the founders, how the founder has his past, on whether what kind of industries has he worked in. It need not be just a relevant industry experience, but also the insights and the amount of research that he has spent on this industry. Because some of our partners have spent like almost 17 years looking at one particular sector, so they have seen the entire sector evolve. So we do have like certain insights, and when we are looking at an entrepreneur, we will pose questions in such a way that we are trying to know whether he's knowledgeable or not. So it need not be you working in banking to build something in fintech. A banking person can always build like something in a consumer side or anything parallel as well, right? As long as he has that advantage of information, right? Which could be his own insights. Product market fit is largely the product offering that you're offering has the right pricing or the right focus that consumers or anyone is willing to pay. That's fundamentally it, and most of our investments are driven by that. Like so we've been in the country for about 17 odd years, been investing since 2006. We have invested in about 140 odd companies.
Wow.
Have like about 10 odd unicorns.
Which one would these be?
So some of these will include Lenskart, FirstCry, Flipkart, Myntra. Then we have done Policy Bazaar, Bizongo. Then we have MyGlam and few others as well.
Got it.
Those are kind of.
That's impressive. And how big is the fund of?
So today we are about $1.2 billion AUM fund.
Oh, wow. Got it. Which is 9,600 crores.
You can't roughly translate because different capital was raised at different points in time. So the exchange rate wise would be like somewhere around 7,000 crores.
Got it. So what is exactly like the meaning of AUM here? Like this is basically the capital deployed.
So the capital deployed plus also we have this co-investments that we manage. So mixture of roughly the capital deployed is
so basically like 7,000-8,000 crore of rupees have been invested into different companies.
Yeah.
Got it. And what would that number be for your funds?
I think for us, we are a relatively new fund. Started out in 2018. We raised our first fund, which was about $40 million in size.
Got it.
That got fully deployed, and currently we're investing out of a slightly larger fund, around somewhere between $50 and $100 million.
Got it.
So I think for us, we've invested about 35 odd companies so far.
And which one would these be? Like some notable ones?
I guess we have one unicorn in the portfolio.
Which one?
It's a company called Innovator. It's you could call it. I mean, it's focused on the US market. They work in the healthcare space. So it's a SaaS solution. Works with healthcare in the healthcare space with providers in the US largely. So yeah, we were very early on over there. Another company that we've invested in that's doing quite well is a company called Mintok, which is in the payment space. So they provide solutions to banks who then offer them on to their merchants. So example here is, for example, they will provide a solution to HDFC Bank, which HDFC Bank gives to its merchants in any small shop or restaurant over there that you see on the road, which helps them sort of manage their payments that they receive from customers. So it's like, think of it like a platform to manage, reconcile payments on a real-time basis. It's an add-on to what a bank used to do before. So the banks used to generally provide only POS solutions. They used to provide that credit card reader. So this is a way for the bank to become more sticky with the merchant. So that's what they do. They've been around for 3-4 years now, and they've raised multiple rounds of capital. They're doing very well, working with some of the largest banks in India. So I think those two are the ones that are doing quite well for us. There are other ones also, but they are quite young right now, I would say. But historically, we've focused a lot on SaaS and fintech as two areas from Fund 1 largely. We're a very young fund still. But now slowly and surely we are increasing our focus on other sectors. I would say, so the way we think about it is we are an enterprise, we are a fund that invests in enterprise focused companies, meaning that these are entrepreneurs who are building businesses to sell to other businesses, not really the final customer.
Is there any reason for not focusing on B2C versus focusing only on the B2B side?
To my understanding, there are 2-3 reasons. One is that as a new fund, I think every fund has a story of why they are supposed to exist and why they are investing in a particular space. You should also remember or sort of keep in mind that we also have to raise money from investors, right? So people typically ask you why they should give you money. Like we ask founders why we should give you money, right?
So GP market fit.
Sorry. There's a
GP market fit.
Yeah, GP market fit.
Yeah, so you need to have a clear story about why you're the right people to invest, to manage that capital. And funds typically try to differentiate. I think early on in the mid 2000s, when India was a very young market, when it came to VCs, I think funds were pretty much agnostic. The whole idea was to have exposure to India, not really which sector. But now I think as times have progressed, we have funds like Chirate who are, have multiple funds in operation. We have a lot of large global VCs also. It's become now very important to differentiate, meaning that to have some sort of focus, which would enable you to raise capital. So that is one reason why funds choose to focus on certain sectors. Secondly, in my personal opinion, when you're starting out as a fund, a lot of funds start out with B2C investments because those get the maximum amount of press. So B2C investments are very, very media friendly, right? These businesses are typically easier to understand. Customers have touch points. For example, if I were to say that I'm a new fund, I'm investing in a Zomato, people would typically get it very quickly. But and it's also important for a new fund to stay in the news in several cases. It helps them in several ways to raise new capital, for entrepreneurs to know them, because sometimes in really interesting deals, there is a competition to get on the cap table to be able to invest in that. So if you have a good profile, founders know you, then there's a better chance that you might get in. Right. So B2C helps with that, but again, that means that a lot of people are coming in, new investors are coming in and investing in B2C, like a B2C brand, for example, which makes it very competitive. And hence, you might end up making investments that you really don't want to make at prices that you don't want to come into. So it is a conscious call that is taken by the founders of the fund, who are the GPs here, as Sachandra mentioned, to decide and focus on sort of a couple of sectors or a segment, so that one, they're differentiated when they pitch for capital, meaning that when they raise capital, they're differentiated, they have a story to say. And secondly, you're differentiated in the market also, that you're known for a certain kind of investment, So that means you'll probably attract better deals in that space rather than doing everything.
Got it. Fair. And what's your fund size?
So we're on fund one. We're closing $100 million fund.
Got it. 800 crores.
800 crores.
Why is it that every VC fund talks in millions of dollars only? Like whenever you also invest, it's like $1 million, $2 million. There's no rupee term here.
So I think it's become like a universal standard, right? Like we raise, I think all of us raise capital both offshore and onshore, right? And it's become easier if you just have one denomination, right? And with the fluctuating in kind of this whole parity of this, right? It becomes easier if you just put a USD at the time of closing, so you have like a fixed USD. And when you showcase to foreign LPs, they would ideally struggle converting it. So it's better to just have a common denomination. I think that's
that's
also
$100
Right. Cool. Let's talk about your interview experiences at all these funds. So a lot of the people who are watching this would be interested to know what kind of questions you were asked in your interviews and how did you tackle them, what you prepared for all these questions. So one by one we can start off. This will be a detailed segment. So let's start with you, Chandranil. So what kind of questions you were asked? Like firstly, before that, maybe let's talk about how did you guys find about the opportunities wherever you're working today, and then the interview experience.
Sure. So I found the opportunity in, so usually people can find it through the headhunters, or what usually helps is, in my case, was a warm referral, right? If you know someone at the fund, talk to them, get them vouch for you, right? That's something that goes a long way. Maybe I'm giving a secret sauce here, but that goes a long way, because if someone is vouching for you, and that goes anywhere in your career, right? That if someone is able to vouch that this person is XYZ is good, the way the fund or anyone would evaluate will be much different.
How did you do that on LinkedIn?
So I had a senior from my college who was there. Reached out to him, had an extensive conversation on. I also had to assess whether it was a fit for me as well, right? So reached out to him, understood what his day-to-day job is like, whether that's something that I would relate to and would be interested in. And then post that, so he preferred, and there was also like a formal application that I applied through one of the portals, right? Whether
Which
that
portal
helped,
was this?
So at that time, I think there was a opening in IM jobs. I don't know if that's active till, but that point in time, that was there. But I also had a headhunter who was reached out for the same opportunity.
So what are headhunters, and like how do we reach out to them?
Headhunters are usually people that a VC fund or someone would mandate to hire for a specific role. So the idea is that when we open a job application as a VC fund, we'll get like thousands of applications. The role of the headhunter is to narrow it down to some 20-30 profiles that fit the criteria that the fund has set. So these headhunters play a huge role in US. In India, it's still evolving. Like headhunters decide whether you become eligible to sit for a Blackstone interview or not in US.
Oh, wow.
That's the kind of role that they play in US. In India, it's more like it's still developing. But a headhunter usually helps for most of the FS recruitment. In my case, I tried all the channels. I don't know which worked. But I did get an interview call. So at that point in time, this was I think March 2021. That was the time I interviewed, and so the first set of interview that I did was mostly from a fitment standpoint, right? Like whether I will fit into the culture of the fund, what are the experiences that I have, and these are the primary kind of criteria that they do, right? Like, and they ask like questions which are more qualitative nature, and what you have done so far in your career. And then as you progress, the first round, and then there was another round with the managing partner who I currently work with. It was again like a free flow conversation like we are having now. We were just discussing about startup industry, how I have seen it, and why do I why did I develop an interest, right? Just my story on why I should be doing VC and what my long-term goals are. And it was a candid conversation that I had with the partner, right? Post that, I had a case study where so I had a bit of healthcare experience. So I did healthcare investment banking, So my initial interviews were surrounding about how healthcare industry has evolved in US and what can be drawn or done in India, looking at the lessons from China or others, right? Like, so most of, at that point in time, and this was I entered the workforce in like 2016. So e-pharmacy and these were still developing at that point in time. So was just able to like relate and like draw parallels and what it's, so there's nothing right or wrong in here, right? It's about your ability to absorb information and then draw some insights on where it's eventually going to head towards, right? That's I think all we do is also to crystal ball gaze on where this is headed. So if you are able to synthesize all of this and forecast that this is possibly where it is headed, maybe right or wrong, but having that opinion is what that matters. And I think that possibly worked for me. Right, and so the next, since I had healthcare background, they wanted to test it out with a different sector, so they gave me like a nanotechnology as a case study, right? So I made like a 20-30 pager on what's the state of nanotech and what are the applications that one can look at on the EV side or in other industries, and which are like the ripe, and also suggested like few investments they can possibly look at in the battery technology, etc. So that was like a 2-hour presentation that I had given. This is mostly like what you'll do in a day-to-day life as well, where you'll be building theses for the fund, right? So largely, I would say a mini case study, mini thesis is what I had built, and yeah, that's how like it eventually happened.
Got it. And there's no like financial modeling round kind of a thing in VC?
VC is largely market focused versus like PE, which is mostly financial modeling driven. So because at a seed stage, you can't forecast what it's going to be in a year, because companies are ideally growing at like 100% month on month. So even if you forecast at a 60% growth, that will be like 50% or 60% of what it could have been eventually. So it becomes financial modeling is not that much of a focus at a series A. It becomes highly important at a series C plus. Series B also there is a certain extent, because you'll have data to kind of extrapolate. But yeah, no financial modeling when it comes to VC. I'm not sure if they had any.
And as much as every startup might want to think that we're going to reach unicorn status in 5 years, it's more art than science.
Right. Yeah. So what was the interview questions for you, and how did you get to know the opportunity?
So I was looking at climate in India, right? I knew I was going to be in India, and I had started having conversations with different people in the climate ecosystem, right? So spoke to other people who were doing climate at other funds, spoke to folks working in consulting on the consulting for investments, all of that, right? And that kind of led me towards Peak, right? Which the way I kind of came across them was, funnily enough, on IM Jobs. I saw like a post, and I decided to reach out to them, right? And that kind of led to the first of many conversations with the partners at Peak. I was also like doing other things at the time, right? I was exploring other opportunities. I had once upon a time in the middle of the MBA, I had a dream of setting up my own fund and all of that. But the more I kind of spoke to the partners at Peak, and the more I gained an understanding of what's happening in the climate ecosystem when it came to investments, the more I realized that kind of this is kind of what I wanted to do. So unlike I think what experiences they might have had through recruiting, my entire journey into Peak was very unorthodox, where it led to me kind of just having these conversations, and then them finally saying, hey, if you're interested in this, why don't you start like part-time initially? So I was doing like 2 things, because I also wasn't sure, had never done venture before. I was like, is this something that I really want to do? And then did that for a couple of months, and then after I kind of realized that, okay, this is something that I'm genuinely interested in, then I kind of came on board full-time with Peak.
So how did you do it part-time? So you were doing a job at investment
So
banking
I was doing something else as well. I was like, And yeah, I was.
But you were
working
doing
like-
a banking job, right? Investment banking.
No, that was a long time ago. This was like post Columbia. I was
Okay.
working with another firm as well. I was evaluating, kind of doing my own thing independently
Okay.
and setting that up, and this kind of happened.
Got it. So, what kind of conversations you had? So, like, what were the discussions around, and how did they finally select you for that?
So for them, I think very fortunately, it was less about, oh, is he a good fit for VC, but is climate something that he's genuinely passionate about, right? And as I was mentioning earlier, like given the investment horizons for VC, right, which are longer than just doing like a transaction in banking, they wanted to see that, okay, is there going to be commitment on his end, right? So we spoke about a number of different topics, right? And because we're climate, right, we went spoke about renewables, trying to understand what's happening in the water space. Spoke about agriculture, and kind of a number of those conversations kind of then.
Can you elaborate more on like what exactly would you like if someone wants to understand like what are these conversations around? So can you take an example of agriculture or let's say water and drill down deeper in the sense what exactly were the topics of?
Yeah, sure. So one of the very first conversations that I had was in the renewable space, and at the time. Government had just come out with some new policies around wind energy, right? That I was kind of really into. Also, like my own family business is in steel, right? Green steel had become a really big thing. The European governments had kind of passed a whole bunch of initiatives around that. So we kind of so just diving deeper into that, like what does that mean for the steel industry in India? How can you convert something that's happening at a macro level into a micro opportunity that might be investable, right? Those are the kind of conversations that we're having, right? Because I think these are conversations that very fortunately I'm on the other side of today, where at least once a week there's someone who like me finishing an MBA from the US, interest in India, or is planning to move to India, back to India. And has an interest in climate, has maybe even worked with startups doing climate in the US, and has sort of picked a topic. Right now, for example, one person that I talk to a lot is this girl who's finishing up her degree at Wharton, right? Who's actually spending a lot of time understanding different technologies that farmers are using in different parts of India, right? Now, somebody sitting in Philadelphia is taking time to understand that. For me, that shows level of commitment that's extremely important towards this, right? So, again, right, you don't always have to be just an investor to get into VC, right? When you're working with a specialized fund, and Dhruvan mentioned a number of reasons why funds are specialized, it also comes down to whether it's the team itself, it's LPs, it's the fund, the companies you invest in, that passion kind of does come out, right? So, to your earlier question as well, we've had companies, reach out to us saying, people we're starting to build our reputation in the market, saying that you guys really understand this, you guys care about the space, I want you all to be an investor for me, right? Despite the fact that somebody has provided them a term sheet and said, we're going to come in. Right? So those things kind of play.
How many companies would you have invested in so far, like your fund?
So we've done, so out of the current fund, we've done 6.
Okay.
Right.
And what's the average ticket size of all 3 funds? Like, what is the average investment you make?
So, we only have one fund as of now, right? So, but typically we're investing 2 to 5 million.
Got it.
So between 15 to 40 crores.
Got it. And what's that number for the two of you?
For us, it varies per stage, but it goes from $500,000 to all the way to 7 million, because we play in the Series B area as well.
Got it.
So seed would be half to 2. Series A would be somewhere around 2 to 5.
Got it.
And 5 to 7 if it's a Series B.
Got it.
And we largely lead, which is why it's the highest possibly.
Got it. So can you elaborate on that? So what exactly is the meaning of leading a round versus participating around?
So in any round that a company is raising, there is a person who is leading the round, who is setting the valuation, price, and everything. And then there are either the internals or other VCs, micro VCs or angels who will co-participate to finish that round.
Okay.
Right. So in most of our investments, we take a lead position. The best we do is a co-lead. So most of, I think it's common for all of us, is we try to manage a certain ownership in mind, right? That we want in a
What is that number usually?
It varies across funds, but typically somewhere around 10 to 15 is ideally what everyone
so you
would go
want
for.
10 to 15% stake in that company.
Yeah.
In the investments.
In
In the
when we
at the
enter,
stage? Okay.
and we ideally would want to maintain that as it goes as well.
Got it. Fair.
So largely it's between 500,000 to 7 million.
Got it. Fair. And Dhruvin, for you?
Yeah, for us in the current fund, I would say the sweet spot is around 2.5 million per investment. But we've done stuff that's 1 million and also maybe on the outer end 4.5, 5 million.
Got it.
But yeah, I mean, a typical investment for us would be 2.5. So I think what one should also understand is how these numbers are decided, right? So it's not just people just throwing random numbers out there. So I think for a fund, typically no fund wants to put more than 10% of the capital into one company because these are high risk bets, right? And if you put say maybe $5 million in 5 companies in a $50 million fund and none of those do well, then you're pretty much dead in the water.
Yeah.
Right. So people want to restrict how much capital they put into one company in the first check. Right. So that's how these ticket sizes are decided. It's to enable a set number of investments to be made from that fund, and typically what happens is that 2-3 years down the road, you have a sense of which companies of the first checks are doing well, and then you double down on them.
Right. In your opinion, so what is an ideal number? For example, if it's a rupees 100 crore fund, how many investments they should make? What is that ideal number? Diversification.
Yeah. So if it's a 100 crore fund, they should not put more than 10 crores as a first check in any
10
one
investments
company.
is like a good number.
No, I mean, I would say that's
On a higher
it should
side.
be more. 10 investments is less.
Okay, got it.
Right.
So what should that
So
number
typically
be?
how a fund is structured is if it's a 100 crore fund, not all the capital is meant for new investments. There will be some portion, say maybe 25 to 30%, which is kept for follow-on investments in earlier companies.
It's termed as reserves.
Yeah.
Reserves.
Yeah. So it's not the whole corpus is not invested in new companies.
Okay.
Right? Because you need, if for example some company is doing very well, and they want to raise a follow-on round, you want to maintain your ownership, or you want to participate in it, then you need to have some capital to be able to invest in it, right?
Yeah.
And this typically only becomes clear as a fund progresses.
Right.
So maybe by year 4 or 5, you will know, okay, this company is doing exceptionally well. So it shouldn't be the case that you don't have the money only to invest, right? So that's a lost opportunity.
So if it's a 100 crore fund and if let's say if 25 to 30% is towards reserves, so 70% would be allocated to investing in new startups.
Yeah.
So out of 70 crores, what would be an ideal number? कितने investments होने चाहिए for good diversification?
Anywhere between 10 to 15 investments, I guess. 5 crores.
Got it.
I mean, that would be the typical diversification.
Got it. Fair. And hit ratio कितना होगा? Like for example, if a VC fund is investing in 100 startups, out of those 100 startups, how many would typically succeed? How many would typically fail? How many would go on the follow-on rounds? Any statistic on that?
So by stages it varies. Like the highest rate of failure is possibly today at the seed stage, because they may not be like scaling up as we underwrite, right? So typically, if you look at the Valley and India as well, right? In Valley it's possibly like 90% or 80 to 90% is the range of failure rate.
Oh
on
my
the seed
God,
stage.
that's a lot.
This is like pre-2021.
Okay.
Ignore 2021 because 2021 was a aberration. In India, it's roughly on that 70%, 70-80% kind of a
good fail
range. Yeah.
Okay.
On a Series A, that would again come down. And as the company progresses to a Series B, Series C+, the mortality rate would reduce. Because the company would have hit the desired scale and all of that for them to sustain. And Series C+, the companies also tend to look, from now on, tend to look for a profitability kind of. And once it hits the profitability, then there's no one stopping them.
Yeah, right. And what's the typical return which VC funds would expect over a period of, let's say, 5 years or 10 years?
So, so it again boils down to what the LP looks for as well, right? So if you look at the markets, which are public markets are giving like 15%, 12 to 15% on an average. So this being a riskier class, requirement is like much higher than that 15 plus, right? So on net, what is desired is a net of carry, net of, I'll tell the carry and fees separately, but net of everything, the investor would want to realize at least 3 to 4x as a base thing that he would want in a 10-year fund.
So how much would that be?
So roughly IRR wise it would be like 20% plus.
Okay, got it.
20% net of everything, every expense carry is usually done. So so typical fund functions in a 220 structure, which is 2% is the management fee that you will charge, similar to an expense ratio that you pay in a mutual fund.
2% of what?
2% of the committed capital.
Okay, what is committed capital?
So committed capital is when we go to the LPs and we say we are raising a 100 crore fund, they would commit say 2 crore per LP, or someone may just commit 10 crores. So right, so on that 10 crores we usually charge like a 2% as the fee. Mutual funds charge it on the NAV, so their fee is much higher. But
what is NAV?
NAV is net asset value, which we also will have at the end of the day, net of fees, carry and everything. What is of the 100 crores, post the markups, when a company goes for a higher round, our stake will also get updated. So our NAV, net asset value, will also increase. So your MOIC, which is the MOIC, is multiple on invested capital, right? MOIC is usually based on the committed capital and what is your net asset value. So that 3.5x that I've told is usually that NAV divided by the MOIC, right? So the idea is to give like a 3 to 4x return to the investor. Carry is usually the profit share. So given it crosses a certain threshold of hurdle, which is termed as hurdle rate, this is the minimum return that you have to give to an investor before you can charge a profit share to.
Okay.
And once that hurdle rate is crossed is when you will have a profit share of about 20% of the profits that you invest. So imagine you have invested 100 crores and you have generated 500 crore return, right? So your net profit is about 400 crores. So you give about 20% on that to the GP for giving you an outsized return. That's the profit share.
So 80 crore will go to the general partner, who's the fund manager.
Yes.
And the remaining 320 crores will go to the LPs.
320 plus your 100 as well. So about 420. On 100 you're getting like 420. A profit of 320 is what you'll realize.
Okay, got it. And 2% is separately charged to to the LPs?
On a recurring yearly basis.
So this 2% will be of 100 crores.
2% would be charged on 100 crores.
Correct. So 2 crores would go to the fund, and 2 crore is now
2 crores per year.
Correct. And 2 crores is now split between the analysts, associates,
and
all of that, right?
It's also about so we also will have like diligence, we'll have like Big Four conducting audit, and all of that expenses would also be factored in that. So it's not just salaries of the analysts, associates, it's also about the investment diligence that happens. Sometimes we initiate by ourselves, sometimes it's absorbed by the company, sometimes we do it by ourselves as well. So it's a mixture of fund running expenses and everything as well. It's not just the salaries, but salaries do form like a major component there.
Got it. So if you were to break down the unit economics of a VC fund business, so how would that business look like? Revenue, then what would be the major cost items, and net profitability wise, how would that look?
So see, I would say there would be like a lot of one-time bonuses kind of, right, which come in at the end of the fund life once you start looking at carry, right? So you can't do it on a year by year. You can look at from a fund basically, right? So every fund will have about 2% management fee, which will cover about their yearly expenses, and then there will be a carry, which is usually your bonus that in any job today that you see, right, will give you that. So that bonus is like skewed towards the 7th to 10th year of the fund. So from a unit economics, you can just do it for the management fee, right? And largely that covers most of the expenses, and there may be some money left, which would be like again like distributed between the.
So what I understand is like in the start for the first 3-4 years, like it'll be loss making only. Right?
It'll be largely just the 2% that.
So
Yeah,
it's
but
covering the
would that be
expenses.
loss making or would
It's
you?
covering the
It
expenses.
wouldn't.
It's
Okay.
not really loss making, right? Because it's 2% of the money that is being committed. So you're
Depends on
you
the
only
amount of
spend
capital
as much
raised.
as you
Yeah.
get, right?
Yeah.
There's no real opportunity.
Got it. But the major money which would be earned would be in 4th year or
Back end,
5th
yeah.
year.
That's in
Yeah.
the carry, as you
And the
mentioned,
carry.
right? That's the.
So it requires a lot of patience if you want to start a VC fund of yourself,
Yes.
right?
It does.
Got it.
But the outcome can be massive, like
Yeah.
if
Yeah.
you do it right. But it's all back-ended, meaning that you need to stay. I mean, in my view, if you want to make real money in VC, you need to stick.
Absolutely.
It's not a quick.
So tell me one thing, this carry which is
Outcome.
there of 20%, is it also divided between the analysts and associates who are working in that fund?
Largely the partners and the senior folks.
Senior folks as in who
So
exactly?
I think the way the hierarchy goes, maybe that's I don't know worth spending time on. Is you start as an analyst. Then you have associates, then you have AVPs or VPs. It's typically then, depending on the fund size, etc., you might have a principal or not. And then after that come the partners who've started the fund and who own stake in the fund. Most of the carry is distributed amongst the partners, and a little bit is left for the VPs or the
Got it.
principals. Associates in some cases do get carry, most cases don't. Analysts don't get it.
And how is that decided? कितना carry मिलेगा? What proportion?
यार वो मतलब I don't think उसका मतलब इंडिया में frankly बहुत बड़ा rule of thumb है क्योंकि वो अभी भी evolve हो रहा है.
It's not that कि 20% का जो profit that won't get equally divided of course,
नहीं,
right?
नहीं.
So analysts and associates would get a smaller share.
Will probably not get any share.
Okay.
Analysts associates in rare cases have carry. Analysts typically don't have carry unless it's like a 3-4 member fund where a lot of work is being done by the analysts, a lot of sourcing is being done by them. Those are rare instances. But typically the carry is distributed amongst the partners, the principals and the VPs.
Right.
Some left over for the
By the way, I
associates.
forgot to ask you, so what are your designations in your funds?
So I'm a senior associate at the fund.
Okay, got it. And how's the hierarchy similar to what
So
you said?
much similar, yeah. AVP,
Okay.
VP, and then principal and partner.
Okay. What's your...
Same, I'm a senior associate. In ours, we have an analyst, associate, senior associate, and then partners.
So you are like the VP, after senior associate. So he must be getting carry as per what you said.
But it's all on paper, man.
He should be saying that, but he's not saying. So I think he's getting.
I
good
also
amount
have
of
carry, so-
Oh, is it? Oh, so you also are.
So we have about a different structure. So we
Okay.
need to be in the firm for a certain
Yeah,
years
okay.
before
That
you
also
can.
matters.
Yeah.
So how many years is that usually?
For us, it's about 4-5 years.
Got it. So then only you're eligible to get carry.
Yeah, it's also about you can't just leave. Right? The carry is also a retention mechanism for you. So
Right.
Yeah.
Or is that good enough money for like being retained in the VC fund? Although I know it depends on the profits and all, but is it like lucrative enough?
So if you enjoy this, and it's a rewarding job. From a monetary standpoint, it's not less.
So for example, if let's say a fixed salary of 25 lakhs or 30 lakhs per annum, if let's say an analyst or associate is getting, so would that carry also be 30 lakhs, 60 lakhs is what I'm trying to ask, like as compared to the fixed component?
The carry would be like 7th year mein aayega tujhe. So 7th year you'll vest. There's a cliff period and all of the.
What is cliff period?
Cliff is usually like after n number of years, this will start vesting, like a stock option that is there, right?
So
that is
can
when
you
becomes-
explain with an
carry,
example?
I think sorry to interrupt, but
Yeah.
think of carry as an ESOP,
Yeah.
stock option.
Yeah.
Right. So typically, if you join a startup, for example, it's very easy to relate like
Yeah.
that.
Yeah.
You're taking more risk to join the startup, so probably taking a pay cut.
Yeah.
Typically, when you move to VC from industries like consulting, iBanking, except if you move to a very large fund, you will typically have to take a pay cut on your fixed.
Oh, is it?
So typically, if you move from consulting or banking jobs, and especially if you spend like 4-5 years in consulting banking, you would typically have to take a pay cut on your fixed if you don't move to a large global VC fund.
Okay. What would this percentage be typically? Like, pay cut would be what, 10%, 20%?
20 or 50.
Like in my case, it was like 5%.
5%.
They
You
largely
also-
matched it.
You also
Yeah.
had a pay cut.
Yeah, like
Okay.
I would say I rented a flat.
Okay.
I was moving from Bombay to Bangalore, so if you can factor in the cost of living, that's how at least I justify it. Saying that it was a newer flat that I moved at.
For me, it was also at like a 10%, but I was moving off a good year in banking to VC. Bonuses in banking, I mean, as you know, are pretty good in good years.
Yeah, but how much would that be, percentage wise?
Bonus?
Yeah.
Yeah, I mean, typical bonus in banking in a decent year is 100%.
Got it.
salary.
So you earn double the amount.
Yeah.
As
Double the fixed.
Yeah, double the fixed.
So that doesn't happen in, frankly, any other industry.
Yeah.
Right. So if you get into banking in a good time, then you might end up making really life-changing money in 5 years. Right. So in VC, typically, you would not make such high fixed because it's also tied to the economics of a venture capital fund. Right. All the returns are back-ended. So they want, I mean, so your outcome will also be typically be back-ended. You can't keep paying people up front because you only have a certain amount of revenue to play with, meaning that your management fee is your revenue for the year. There's no other source of revenue typically, unless you make exits, right? So
and typically it would take 4-5 years to make an exit, right?
I mean, that's the lower end.
Okay.
I mean, if something really goes well, then it's for 5 years. But typically, it would be between 7 to 10.
For a seed stage, it usually takes like 7 to 8 years to see exit. Yeah.
So that's why there is not a single young VC fund partner, right? I mean, like a person who's like very young in his 30s who's like at a senior level.
I think now it has changed. Like now there are people who are getting absorbed to the partnership.
Okay.
I don't recall the specific name, but there's one.
No,
person
what I meant was like if someone is starting a fund, so I mean all the people who have started their fund would be in their 40s and 50s
Not
is what
really,
I'm
no.
saying.
There are folks in there.
Like I know
someone.
Exim is
Pearl
is
is
actually
now.
like it's like 30s.
Okay.
I think even
late
Sparrow.
Sparrow.
So these are typically
young.
micro VC funds. If people who've been sort of, you could think of them as more institutionalized angels, right?
So they would invest what, like 1 CR, 2 CR or lesser than that?
Typically
Okay.
2 to 5
So I
CR.
think Eximus's first fund was what, like 10 million, right?
So these are typically first check funds,
Yeah.
targeting certain
Got it.
sectors.
So how much one can expect in a VC fund? So if let's say someone is joining as an analyst and then associate, so what would be the salary ranges at all the hierarchies in their career?
So when you start off, it would be like 20 to 30. If you're so again, like you need to break down which fund you're going at.
Yeah.
Right? So if you're
Can
looking
you
at
break it down?
Yeah. So largely you can break them down into 3 segments, right? One is the global VC, then you have domestic VCs, and then you have the micro VCs, right? So global.
Can you give examples of
Yeah,
all
sure.
the
So
funds?
global will include the likes of Sequoia, Axel, Matrix, Nexus, Elevation, etc. Right? These are all like VCs which have onshore, offshore kind of a structure there, right? And the pace would be like the pay would be anywhere between starting at a 30, 35, ranging all the way to like 50, 60 as well. Right?
Got it. At an analyst level?
At an analyst
Okay.
level.
Wow.
And
They would be very stringent while hiring, I assume, right?
yeah, it's
very
highly
particular.
stringent. Yeah. On the domestic, it's a bit lower because some of these funds function on a 330 model.
Okay.
Because
So
of the
instead of the
higher
220
management
model.
fee, they are able to like also
Got it.
pay higher, right? Domestic VCs is typically like 220, so it would be anywhere between like that 20 to 40 kind of a range is possibly
Got
the
it.
best.
So 20 to 40 lakhs per annum at an entry level.
Yeah.
And how is the growth typically? Like let's say after 3 years, like typically after how many years would you get promoted and what is the salary increment?
So it's highly a self-starter. VCs, like there'll be nobody to guide you. Like in banking, we have like a training program where you are put to teach modeling and all of that. Versus in VC, you're just thrown at a problem and asked to figure it out by yourself. So you have to be a highly self-starter.
Yeah.
And when you are doing it by yourself, the growth will also be exponential. Versus a hierarchical structure that is formed in banking, where analyst is a 2-year or a 3-year program, and then you'll have like an associate, which is a 3-year program, and then VP, and then business dictates it, right? In here, it's usually what you are able to prove. So you can start as an analyst, especially in domestic funds. You can start as an analyst, prove yourself, get some good deals, prove yourself worthy for the fund, and then you can rise to an associate in just a year. And then from associate, I've seen people who have become an IVP in just a year. It happened in my fund as well.
Okay.
Right. So the career trajectory is largely linked to how you perform. There's no like set path. But usually, if you were to define, like most global VCs recruit for a pre-MBA, so that would be like a 2 to 3 year program, right? And 80% of the class gets churned after a 2 to 3 year. They prefer to go for an MBA, and then the remaining either move on to a different opportunity or grow to become associate, senior associate kind of a track, right? Which is essentially in the global funds a partner track. On the domestic side, you do not typically have a formal pre-MBA structure because people come in with a mindset whether they will want to continue or not, and if they don't see the fit, they usually go for an MBA. If they do see a fit, they stay back.
Can you give some examples of domestic funds also?
So domestic funds would include us, Chirate, Kalari, Bloom, K Capital, KwK, to name a few, right?
Got it.
So yeah.
Fair. And what would the usual typical increment be after like a point in time?
So you will at a associate or a senior associate level, you'll cross the 40-50 threshold there, right?
Got it.
Yeah, and from there on as well, it's a bit of an exponential as you upgrade your titles, right?
Right. So Dhruvan, I think you will be able to answer that better. How much would be the salary ranges at different levels?
Yeah, I mean, for a market like India, I would say VC is also a very young industry here. So I think these numbers, while we average these out, there will be wide differences within that range. I would say anywhere for an analyst, I think 20, I guess, would be the median for Indian funds. 20 to 30 maybe for the larger funds. And then, I mean, we would typically at an associate level again 35 to sort of 40, 30 to 40 maybe. And then beyond that, I guess VP principal sort of gets mixed up here because we don't have such a mature industry. So I think that would be 50 and above overall. So by the time you're VP principal, whether you're coming in, so I came in as a principal after 6-7 years of IB experience. So I mean either whether you have VC experience or not probably doesn't matter at that point. But it's very rare for people to make that lateral shift from other industries. I got lucky. I mean my scenario was really unique. But typically by the time you are a VP principal, you spend about 6-7 years in a particular domain, whether VC or otherwise. So you typically come into that range. And then after that you have partners.
And partners, how do they draw a salary or just the profit share, or how does that work? Any idea?
Depends again. I don't think there's any simple answer to this. They would draw a salary. Depends on the stage of the fund and also the profile of the founders of the partners. Several partners are entrepreneurs who've been extremely successful. They're starting the fund after they've sort of exited their companies. All of that also happens. So they would probably draw lesser salary. But there are some partners who are professional investors, right? So you've grown as the fund has grown. So they will probably draw a salary. But I think for a lot of them, a lot of their wealth is also linked to the fund, right? And they would also get an outside outcome at the end of the fund. So that also comes into play.
Right.
Think of I would say that, for example, when I think about KwK, we are also a startup in a way. You start a fund on a particular thesis, assuming there's a gap in the market, you pool some capital, and you also have to wait 10 years to see whether it's working out or not, right? So I think it's one of the most difficult asset classes to create a legacy in, because there's so many uncontrollables. And I would say it's very easy to get distracted in VC. Because the logic is that you have to have very large outcomes in a short period of time. In a market like India that's still growing, it's still so unorganized, it's not straight. A lot of things happening. It's a very chaotic environment. So usme bhi GP market fit, as you were saying, is very important. You need to be in the right place at the right time, which also means that you might end up taking bets on trends which might probably fizzle out completely. Like what happened with Web3, for example. A lot of that money is gone nowhere.
Crypto
That's
also,
how
right?
That's how markets are also built. It's the nature of the market to get built like that.
A lot of funds are also investing in crypto.
Yeah, I mean, which is
startups,
Web3. So, I mean, typically how it happens is that some technology reaches some level of maturity or consumer adoption. There's the flood of ideas that come in. Most of them don't work out. But then if the technology is strong enough, which I think it is, blockchain as a technology is what crypto is based on, that will typically persist. And there'll be other better, more mature, stable applications for it. But it's very, I mean, it can be a lot of funds on the back of crypto have shut down, right? A lot of them put too much capital into crypto. So it's a very difficult asset class to make money in. It's high risk capital. The mortality, I guess, for VC funds is also very high. It's very easy to start a VC fund, frankly. Like, if you were to start a PE fund, it would typically have to be a larger pool of capital. You need to play larger stages. But here, if I spend 5-6 years in the industry, I have some capital, I can gather some money and start investing as an angel and keep going from there if I have a couple of hits in the beginning. But it's very difficult to build a long career as a VC and be consistently successful.
Right.
Because the payouts are very back-ended. You need to be very patient. And you need to keep doing the same thing over and over again. So,
right. That makes sense. And when you said that you guys also raise capital from the limited partners, so who would these limited partners typically be? Like, what is their profile? What's their background? And who are these people?
So, I mean, think of these as institutions. So the same people who invest in, say, a PE fund, who also invest in a VC fund. So, like how you invest in the market, you would have some debt exposure, you would have some equity exposure, you would have some money in gold and some in FDs. So, typically you do this to diversify your risk, right? Similar is the case with people who invest in VC funds. So take, for example, so I think there are various classes of investors here. One is your endowment funds, right? These are, there are educational endowments, like, we would have large colleges like Ivy Leagues, like Stanford, Harvard, have large endowment funds. You would also have philanthropic endowment funds, like, for example, the Zuckerberg Initiative, or you have the Gates Foundation. These are very well-known endowments. So they typically allocate some capital to VC. Then you have institutions where you have pension funds, which are very large. The Canadians, Americans, the British, Australian, all of these manage very large long-term pools of capital. So they allocate some portion of the capital to VC funds. And then you have institutions who themselves invest, but also invest in other funds. So these are called fund of funds. And then you have wealthy individuals or entrepreneurs who've made large exits, and they're typically looking to deploy capital. And then in the last bucket is the traditional institutions. For example, a lot of Indian banks, Indian corporate houses also have some portion of money allocated to venture capital. So this is sort of the classification of who our investors are. And also, I think another reason, just coming back to my earlier point about how VC funds differentiate. For example, if it's peak, right, they are focused on sustainability. So they will have LPs who want to invest in sustainability. So now with the increasing focus on ESG goals, sustainability, right, where everybody wants to have an exposure to climate change, etc., mitigation, you have more, your investors will also have a mandate to invest certain amount of money in sustainability, which they might do directly, meaning that they might invest directly in a company that's working on a technology, or they might invest in a fund that's only investing in climate. So that's how it works. So on the back end, so those machinations are there. That's how you position your fund, and that's the those kind of LPs you go behind. To raise capital also.
Got it. Fair. Cool. I think that's a granular answer here. One quick question which I had about the route of getting into venture capital. All three of you have a prior investment banking experience. Is it mandatory to have an IB experience to get into a VC fund? Because all three of you have that. Should I take? Yeah, sure.
So I don't think there is any cookie cutter approach, right, or a cookie cutter profile that gets in, right. When I was looking at VC, I was told that consultants have a higher demand in the VC side, right? But having said that, what really matters is what you have interest in, right? If you have an interest in VC or startups and all of this, then I think if you are able to showcase that, I don't think any VC today demarcates that you're not from a certain background, so we wouldn't recruit you. Like today, if you look at the world's most successful VC, Douglas, who started Sequoia, right? Who was at the helm of Sequoia, he is actually like a arts graduate, nowhere linked to the world of investing or finance in any sense. Even if you look at like Lee Fixell also had like a unconventional background of being a BBA, not demeaning any of these degrees that they've gotten, but is it that unrelated to the world of finance or VC in any sense? What made them successful was their keen interest in this and what they did to build those large institutions, right? So I think for me, the more interest was that I wanted to get out of this whole bird's eye view that I was getting from investment banking, right? Which was just from jumping from one transaction to the other without knowing what's happening on the ground. And for me, the next best route was either do a PE or a VC. And I was highly pragmatic that these were the only two industries that I would want to go. And I started recruiting for only those two. And yeah, like, I mean, VC, and I did have a few other opportunities, but I chose VC to be a career that which was out of my comfort zone and wanted to like experiment since I was young as well, right? So that's how like I chose VC to be different for them.
I mean, I spoke about how I ended up at VC, but no, to answer your question directly, I mean, you know, kind of even in terms of people that we recruit, right? As you rightly put it, you know, there is no one fixed background, right? Like I think each of us have a number of years of experience and have then gone into VC. We have even recruited people straight out of college, right? So it is about what the person can bring to the table, right? It is about how they approach towards, you know, startups and towards funds is. And I think today, kind of when, you know, anybody asks me whether like a VC is a good route to go for, and whether, you know, should I do banking for 2 years, get an MBA and then go to VC, or should I, you know, work in an MBB and then kind of grow? I think it's, you know, as Dhruv and Neil put it, like it is a long-term career, right? So if you have the, like, you know, when I made the move personally from like private equity to VC, right? I think the biggest adjustment for me was being okay with, or becoming okay with ambiguity, right? You do not make any decision having 100% of the information. And I think that is an extremely important, like, you know, personality trait that not everyone has. If you can kind of build that over time, then you know that VC is kind of the right career for you, right? And of course, given like everything else that has been mentioned earlier. So it's more about who you are as a person. It's more about what you're interested in rather than kind of what you've done, right? So yeah, I mean, it doesn't matter what school you come from. It doesn't matter what education qualification you have. Even though I studied economics, right? Like I think the fact is one of my biggest regrets right now in life is like not having done engineering, right? So these things like matter, right? But also given that VC is a very, you know, kind of has a very steep learning curve. It is a lot of learning on the job. So as long as you've come into the door with the right attitude and, you know, with, you know, an ability to kind of make a difference, you can definitely like make it something once you're on the job.
What are some of the skills that you would look for in a candidate who's giving an interview?
So I think, you know, as I mentioned, I think one of the biggest things for me is, you know, where does their passion stem from, right? Like I have people literally like tell me in interviews that, oh, I want to work with you all because right now climate is sexy. And I'm like, okay, yes, you know, wish you the best of luck, but this is not the kind of person that we want, right? I'm willing to train anyone as much as needed, as long as they bring in the right attitude too, right? So I think that kind of makes a world of a difference. And I think it's the same opportunity that was sort of given to me. So it's kind of very important for me to
Yeah.
sort of pass it on as well.
Makes sense. Have either of you taken interviews? Have you hired candidates?
Yeah, I think we all
All
have
of
right
us,
to
yeah.
us.
So what kind of questions would you ask to the candidates, like typically, and what would you expect from those candidates?
I think maybe, before doing that, I'll just sort of complete the earlier. I had a point on the earlier question about whether you need to do banking or you need to be an MBA to do VC. It's also important to understand how firms compose their teams, right? So there are 2-3 aspects to the job. The first one is sourcing. There's a lot of outbound that you need to do. You need to be part of, or you need to have access to certain networks to source certain kinds of deals. So for example, a firm will also always try to have access to those networks through the team. So the partners have their own network, meaning from where they come from, their prior work experience, where they've just sort of studied. But when they look at the rest of the team, the analysts, associates, VPs, they will need some people with access to IIT networks. They will need some people with access to MBA networks. They'll probably need some people with access to CA networks, right? Depending on what the fund is investing in. So for example, we invest a lot in fintech, right? So there's like 2 CAs on the team now from 0 before. And that helps, right? Because, if there's some idea to be validated, etc., intuitively, as you would understand, we get it, right? Because we've spent so much time with the subject, right? So that is also important to understand, that the fund that you're targeting, are you a right fit for that?
Yeah.
That matters to an extent, but as they've said, it's not necessary. And then sort of just coming back to your current question about what I personally check for, I think 2-3 things on a broader level. I mean, I think at the VC stage, it's more important to check for attributes rather than specific skill sets, because it's a very generalist kind of a role. You need to have a very broad knowledge base in order to be able to make it. It's not a one-dimensional job, especially if you're starting out early on as an analyst, right? And if you want to make it, you need to evolve or grow. As he said, it's a very steep learning curve in all aspects. So I would say the attributes that I check for, number one is curiosity. You need to be curious as a person. Whether, and there are proxies for that, the kind of stuff that you are exposed to, your experience. I think people with very unconventional backgrounds might make for very good VCs actually, because in several cases, the breadth of life experience helps you look at a lot of different viewpoints. And in VC, spotting the most unconventional opportunity can give you a very large outcome, right? That's what you're aiming for, parts of the market that are undiscovered, that people don't really look at, where there could be a massive opportunity. So if you're coming from a very conventional sort of a background, naturally you would not look at them. Naturally you would probably not identify those, or you might disregard those, or you might not see the potential. But if you have an unconventional background, right, it makes sense, So and the ability, so curiosity, I think just sort of what you read, what you're exposed to, who the people around you are, where you come from. Have you done projects in the past? Have you taken that initiative to keep learning, etc.? That matters.
So how do you filter the candidates here? Like, because he mentioned that there are like thousands of people who apply.
Yeah.
But how is the initial filtering? How does that
I think initial filtering, there is some level of basic filtering that is done depending on the educational institute.
Yeah. So what are preferred?
Again, as I said, it depends who you're hiring for, right?
Yeah.
So
let's assume an analyst who's just applying for a VC fund right now.
Yeah, again, depends. So for example, if I think we are currently hiring, but so we're looking right now, we're trying to look for an engineer because we want that network to be there in the fund, right?
So engineer from like which colleges would you prefer?
Typically the IITs, NITs or BITS.
Okay.
Because
thanks for mentioning BITS. Otherwise,
Pilani actually is one of the most active entrepreneurial networks.
Oh, is it?
Yeah, BITS Pilani.
It's actually.
It's pretty impressive, right? So again, it's sort of linked to a lot of these students from IIT, BITS, NITS. They do start up. The ratio is very high there. The kind of culture you're exposed to, etc. The opportunities you get is very different from, say, an undergrad school like DJ Sangvi in Bombay, right? It's just the kind of things they were exposed to over there is very different in a residency
Right.
school.
You have some bad experience with DJ Sangvi or
No,
something?
I'm just trying to draw parallel.
No, I'm just kidding.
Yeah. It's very similar to a commerce degree in Bombay versus Delhi,
Yeah.
for example. The kind of exposure you get in Delhi undergrad is very different from a
Yeah.
BCom in Bombay undergrad, right?
Yeah, I was just kidding.
Yeah. But so I think the initial filtering, especially if you have a lot of candidates, there has to be some objective way of filtering it out. So it will typically be years of experience, where you worked, and your college. I mean, nobody can deny that fact. Like, we can all be very dreamy and say that यार कोई भी घुस सकता है, but एक level का filter होता ही है.
Right.
You can't deny it.
Yeah.
And that's a function of the job market that we live in, especially in India, where you will need to have objective filters, because you have, like, for example, the opening we floated last month got 1,000 applications.
My God.
Now there is no way that, and there are 2 people handling the process from our side. There's no way I'm going to sit and speak to 1,000 people.
Yeah.
Right?
वरना investing कौन करेगा फिर वैसे हो जाएगा.
So then there is some objective filter, no question about it. So you have to pass those filters. And then after that, how a typical round works is, so for example, we give it a case study in the very beginning to all the guys who filtered in. What people fail to understand is a case study is also a measure of intent, right? At least that's how we see it, because it's very easy to apply to jobs right now, like one-click applications. For example, LinkedIn, you just have to click on that application. It'll be auto-filled. You don't need to do anything. So a lot of people might just be doing it because it's there. They might not really be serious about it, right? So we initially shortlist using objective filters, and then we typically give it a case study.
What kind of case study is this?
So case studies typically, again, there are various kinds of case studies, but in VC, I think it's very important to know how to think rather than what to think. Because today you might look at a drone company. Tomorrow you might look at a fintech company. You can't apply the same lens to everything. The companies might be at different stages. So you need to be able to grasp several different thoughts, ideas from different domains, and sort of synthesize it on a head, and especially on a piece of paper. Because without that, it's very difficult to understand the opportunity yourself, make sense of it yourself, and then pitch it internally, explain it to other people, right? And in a scenario where you're probably looking at 20 new companies a week, so how will your company stand out, right? So that becomes very important. So that's what you test in your case study. We typically give out either an industry, saying that this is an industry that we're working on, pick one company and make a case for it.
Okay. Can you give an example, like any industry and what you expect from the candidate?
Yeah, so I mean, take example, okay, maybe SaaS, software as a service. Pick a very large company like Freshworks, right? So you would typically say that, okay, this is the company, and you have to make a case internally कि इसमें invest करना चाहिए कि नहीं, right? So then you see how they break the problem down. So there's typically 4-5 things that we look at as a basic. There's a lot of other subjective matters that go into whether you make the investment or not. But typically it's what size of the market, the team, whether the team is a fit or not, why now, like why is this the right time to start, what is the approach to the market, right? Which channel are they picking? Are they going B2B, B2C? And then the product, how is the product differentiated? What are the features like? And then are you able to break that problem down? Are you able to apply these filters to that company, whatever stage it is, and then recommend? The recommendation is right or wrong is not important. It might be wrong, but this is the first time you're looking at the company. It might be wrong, but have you taken the right path to making that? Is it a thought out suggestion, or is it just random? अभी आजकल तो लोग ChatGPT यूज करने लगे हैं, तो वो भी एक फिल्टर हो जाता है.
It's easy to figure out, no? But
yeah,
like,
it's easy to figure out.
ChatGPT use किया and किसने actually research किया है.
Yeah. So that's what we try to test in a case study, and then the next part of the case study is typically a presentation of the case study.
Got it.
You also have to have that ability to communicate your point of view, right? So for example, this time what we've done is, interestingly, so there is a tool called Loom. I don't know if you guys are aware. So there's a tool called Loom which allows you to record a small video explaining something, right? So it's like a bubble that stays on the screen. So if you have to, for example, explain, if you are away and if I have to record this podcast and you need to tell me what are the things I should do. So rather than writing them on a piece of paper or giving me a call, you could record a small video. It'll be overlaid on a sheet of paper and you could run me through the sheet of paper. So this time we've given people an opportunity to record a 2-minute video of their investment memo, for example. So
It's
right,
very
so
interesting.
yeah, so we are trying this out.
Yeah. Let us know how it works out. Both the funds can also try it out in the future.
So the case study, actually putting it on a piece of paper, writing your thoughts down, and the second part is communicating it. Case study, and then you typically have just calls with maybe if it's a small team, then everybody in the team, whether it be an associate or VP, and finally the partners.
Okay.
And at each level, it becomes less and less objective and more subjective.
What do you mean by that?
मतलब I guess जब भी आप VP या associate से बात कर रहे हो, your conversations might be more specifically about the case that you've done, why this makes sense or not. Then they might ask you for, pick an industry and give me, which companies to invest in and why. It may be more about your experience, what you did not do, what you learned, what you did not learn. Maybe in some cases, if there are larger funds, if they're investing at a later stage, then financials might also come into the picture. At least you need to have a sense कि आपको P&L balance sheet cash flow समझ में आता है कि नहीं. मतलब can you make sense of it? Can you figure out what's wrong, what's not? Can you figure out a working capital cycle or not? Because all of that becomes important as a business grows, right? So you need to have a sense. And it's not that financial modeling is not important at all, because ultimately maybe it's not very important at seed, etc. But as you start going upwards, you need to be able to project what the company will look like 10 years from now, right? For that, you need to make, be able to make at least a projection on an Excel sheet कि यार ये economics काम करेंगे कि नहीं करेंगे, तो valuable बनेगा कि नहीं बनेगा, मतलब will they need $1 billion of capital or $100 billion of capital? That makes a world of difference. So in my personal opinion, as you start moving up the size of the fund, having a handle or at least an understanding of financial statements become extremely important.
Right.
You can't. I don't think it's. You can completely.
Which is where you think that nowadays CAs are being preferred in these kind of roles.
Yes. Not preferred, I would say, given an opportunity.
Yeah.
Because
earlier I think they were not given an opportunity is what I know.
Correct.
I think the trend has shifted a bit.
And also the reason for the shift was what happened in 21-22 when engineers were getting paid obscene amounts of money to do startup roles, right? So all of that also played. So the value of an engineer or software engineer, the guy who would probably go into a VC say 5 years back, would probably not choose that because so then people started looking for other pools of recruitment. The CA was one.
How do these people get to know about the opportunities of applying in a VC fund? If someone wants to apply in a VC fund today, what are like 3-4 avenues for them to apply to a VC fund?
I think everybody started putting stuff on LinkedIn nowadays. People have started.
So number one is LinkedIn. You need to follow people
who
are there.
You need to follow. I mean, I get a ton of requests every day. All these young college kids or people who've probably just 1 year out of college, just following people, not even being connected to them, it also helps because.
So you're like the LinkedIn influencer in your company.
Not at all. I mean, all of us must be getting it. It's not, and especially because we are recruiting right now, right? More than people, I think it's important to follow fund pages because all the funds are very active now on LinkedIn or are getting active.
So all the funds post about the vacancy?
Typically they do. It's become a good source of recruitment.
I think roughly to just jot it down, you can prefer the headhunter route or the
headhunter is basically Michael Page and Native. But they reach out to you, right? You can't reach out to them.
You can as well. You can have a confidential discussion with them to see if there are any opportunities.
And how do you reach out to them? LinkedIn itself?
LinkedIn.
So you find people who are working there. Okay.
But there are guys from Michael Page and Native who will post on LinkedIn saying that there's an opening, you please send your CV to this.
There's also Basil that have just started, right? And you, on the other hand, you can also like directly reach out to this one. So if the market is like just hardly like 40-50 funds out there. So you make a list of those funds, see which is your fit, reach out to people. It need not be just about recruitment, just talk to them. And one other thing that we as a fund also look, because we also tend to hire off cycle where there is no mandate for recruitment or we're looking, but if the candidate is nice, we also hire them, right? So largely what we look for is alluding like what they all mentioned. We also want to look at the depth of knowledge or things that they have, right? As you said, like synthesizing the whole information and just forecasting on where this is headed towards. I think that's where we want people who can think forward. Whether it's right or wrong, that doesn't matter. And that's substantiated with, say, information on how it has played out elsewhere as well, right? And now that has become little less, where ideas are being started in India and then taken to the West. Previously, it was the opposite, where cycles would have played out in US, China, and then would have come to India. Now we have come to a stage where things are running parallelly. So just forward looking on what's possibly going to work, right? For example, like when EV, I had a case study on nanotech and we were talking about EV, right? So EV at that point in time, there was a huge charging infra that was like taking off and everything, right? At the same time in China, there was NIO, which was starting a battery swapping. The whole point of, at least with that thought process that I had at that time was, if for two-wheelers and these two take off, it has to be a point of high convenience to the consumer. So that's when the battery swapping and this. So I had an opinion that battery swapping is equivalent to for you to fill fuel, where you can just swap the battery in about 5 minutes or 2 minutes, right? So something like this, which has not possibly started. This is back in 2020 when I was interviewing, right? Battery swapping was possibly not there at that point in time. It was just getting started. So something which you can look forward and say with surety or just opinion that this can play out. It may or may not happen. So that's the kind of, at least, and I would strongly suggest whoever is possibly applying and doing a cold outreach, do some analysis about some sector that you're interested in, attach it as a cold outreach. That shows the intent that you are interested in this VC as a long-term career, and also like gives the person who's seeing an idea of how you're thinking. And now, even if you're using ChatGPT, whatever, you get caught after that, because if you can't hold a conversation, then it's easy to get, distinguish between a person who has actual knowledge and who doesn't. So I would ideally suggest refrain from using all of that and just like talk to people. Today, entrepreneurs or any industry experts are also on like Reach. You can reach out to them on LinkedIn. When I was building the case study, I actually reached out to entrepreneurs and industry experts to just get their point of view.
Got it.
A case study is actually a resemblance to what you'll do in a day-to-day life.
Makes sense. That's a very good piece of advice, valuable piece. Like just while cold reaching out, so just attach some sort of sector deck and all. Any idea how many people would be hired in this kind of an industry over a year? Like just a rough guess on that number.
So as I said, right, like the VC funds are also limited. So
how many, like now, global, domestic, micro?
So global, you hardly have like 5 to 10 at best, right? Domestic again would be like 20 odd maybe, and micro VCs, etc. It's like a 50 on is the maximum outside, right? So roughly each fund will possibly hire one a year on an average.
That's it, only one.
1, 2 at max. Because see, all these funds are also on a lean team. 10 to 15 is like the maximum that they will stretch to, of which most of the partners, who will be like 6 to 8 of them, would be staying. So there will be so it's ideally the churn happens in the analyst associate place, right? So that would typically be like 1 or 2 people leaving per fund.
So are you trying to say there would be 75 people only who would be hired in 1 year?
That's the maximum. That's possibly the maximum.
Less than 100 for sure.
Less than 100 for sure.
My God. So it's very difficult for anyone.
Yeah, this is just VC. VC alone. Yeah.
Right.
But VC is also, I think, expanding, I would say, I think over the past. So there's 2-3 things happening which sort of make it more interesting. One is there's a lot of domestic capital now coming into VC, which wasn't the case even 5-6 years back. So as an asset class, also people are looking at it in a more organized manner.
So you're saying Indian companies, like the founders of those companies and all, they are putting in more capital.
Entrepreneurs themselves. And there's a wave of exits that have already happened, right? So founders are putting money back into the industry, either as investors or starting their own companies. Right. So that cycle has happened once or twice. So there's a lot more capital coming in. So this industry is going to keep expanding. And what is also happening is the industry is big enough. We are deep enough as a country to have specialized investment vehicles, meaning that something for climate. There are VCs who only invest in fintech for India, right? So now these niche pools of capital are possible. So that will keep happening. Guys who sort of have built certain experience in a particular space, they will tend to invest, and they will open their own institutions.
Right.
So I think this pool will keep growing. If you ask us this question maybe 3 years down the line, this number might be close to 150 to 100. But this it's not going to be 10,000.
Right. Yeah, makes sense. It's a very niche and very small industry. But then apart from LinkedIn and headhunters, any other ways you guys are aware of, like how can people find these kind of opportunities of getting into a VC fund, or like this is the only thing that okay तुमने LinkedIn reach out कर लिया, headhunters कर लिया, बस अगर नहीं मिल रहा है तो नहीं मिलेगा.
यार IIM jobs पे भी लोग पोस्ट करते हैं. मतलब जॉब पोर्टल आपको ये नौकरी पे तो नहीं मिलेगा.
So only IIM jobs.
I would say IIM jobs.
Okay.
And a lot of hiring happens through networks actually.
Okay.
Somebody that we know.
So again, LinkedIn only, right? I mean,
LinkedIn or networks.
Not necessarily. You can also network with people outside as well, right? Like so you can meet them for a coffee or just have a normal conversation with them. Right?
No, but how do you meet them? I think via LinkedIn.
So I think any industry events that you can easily
so how can people access these kind of events?
That's a question. Because if I'm placing
the large events, like usually get sponsored by Economic Times and all this, so they get marketed a fair amount, right? So that's where that's a good place to start. And then once you start attending these larger events, the more people you meet, you learn about specialized events happening.
So what kind of events would these be? Can you give some examples?
Sure. So I mean, there is like a venture capital conclave happening like in 2 weeks, right?
Is it?
IBCA.
The IBCA one, right?
Sorry, what?
When is it next
The
week?
Indian Venture Capital Association is organizing.
It's called
it, right?
IBCA.
Okay.
Yeah. So it's essentially like a 2-day gathering of VCs kind of across India, discussing different topics that VCs are focusing on, right?
So these are ticketed events. These are ticketed events.
Ticketed events, right? And I mean, then if you're not associated with the industry or anything, they're not cheap, right? But I mean, I've done that when I used to go for a lot of these networking events, and sometimes they pay off.
And how can people get to know about these events?
So they like I said, right, that a lot of them have like some really large sponsors, and they just get marketed like the newspaper, or you follow them on LinkedIn, and something gets posted, and it's but I think the most important thing, and he was like touching on that earlier, I think whether it's VC or just industries in general, right, I think networking itself has not gone anywhere, right? And nobody wants to receive a message with an objective in mind, right? Sometimes you just want a message from someone that's interested, and 5 or 10% of the time you might be willing to sit down and have a conversation with that person, right? And it's sort of like the same advice that I kind of give founders as well, that don't just have a relationship with the VC because you're going to be raising capital, right? Like build a relationship with the VC through your journey, so when the time comes to raise capital,
the way I'm building with the three of you right now.
Exactly. Who are you again?
Right, just kidding. But yeah, I think that's a very good piece. I think even INC 42 organizes a lot of events.
Yeah.
Your story
Your Story does,
tech sparks
yeah.
वगैरह काफी होता है.
And what also happens is
even you guys know 1949.
Yeah.
You guys also organize a lot of events.
Yeah, so I think it's if you're a candidate who wants to enter VC, it's important to sort of have an understanding of or pick a niche and exploit it, meaning that go deep into it, whether that is identifying events that you want to go to. You will only be able to do it if you have some objective in mind, meaning that not objective but some idea of where you want to be. Figure out which funds are doing stuff that is interesting to you, right? So I think that increases your chances of success. Because the fact of the matter is, this is not an industry that will hire 1,000 people a year, right? So there's no mass recruitment drives.
Yeah.
So there will be certain channels through which people will be recruited. Now, if you're lucky enough to get into those institutions, for example, the IITs, NITs, BITS, If you're a CA ranker, maybe doors open up for you.
Yeah.
But if you're not, then you need to do something, because it's very possible for these vacancies to get filled using these avenues only.
Exactly.
So it's very difficult to get in otherwise, which is a fact, right? I won't sort of mollycoddle it or anything.
Yeah.
So it's important to make a mark, or at least be very focused in your approaches. You can't for example, all of us must be getting LinkedIn messages. So, I'm not going to have the time to read all 10 messages sound the same.
You guys would also have some way of filtering, right? I mean, if someone is reaching out to you on LinkedIn, you will also be like, हाँ मैं इसको time देता हूँ या तो मैं इससे बात करता हूँ.
So in most cases, like, so we have an institutional process there. Like we have a HR who takes care. So any interesting resume that I find, it possibly forward to her, and she keeps in touch so that.
What's the definition of interesting resume?
Yeah, so as I said, right, like the case study or someone was put in some interest there, and the depth of that, right, like so, it takes us possibly 2 minutes to just go through your resume and case study to just form an opinion on whether you have substance or not, right? I'm sorry, I'm possibly a bit mean in here, but
you're just being practical.
So if you don't put that intent, if you just, I get a lot of ton of messages saying that I'm interested in your firm, and I would want to get in touch with you for opportunities. What I would suggest is take some time, dig about what my firm does, what are the companies that possibly piqued your interest. That kind of shows that you've put in effort than giving a simple like cold outreach saying that, hey, I see there are opportunities in your fund, just refer me. That sounds more transactional than when you have spent time and gone through what my firm, that shows like you have a high intent. So I think that gives you a leg up if you show more intent there. That's how like I classify people as well. I don't know if
Yeah, I mean,
similar.
That's how you do it. Otherwise,
Otherwise, it becomes difficult to respond to each and every message. How many hours would you guys be working on a daily basis?
So for me, it's typically.
We're always working, yeah.
So again, like it depends on this board meetings or these, but typically a 12 to 14 is what, unless in banking it was like 16 to 18 a day was like common. But what is the beauty about this side and this course of PEs as well is that you have a control on when you'll have a bad day. Like if I have a IC coming up in about 2 weeks.
What's an IC? Can you
IC, yeah. So IC is a investment committee meeting, saying, right? So every idea or startup that we are evaluating, if we feel that this is worth investing in, we bring it to the table. IC is usually consisting of the rest of the investment team members. You'll bring to the IC, showcase them that this is a company that I think has a potential to.
So basically, you act on behalf of the founders, and then
that's a pre-IC that happens before the IC. First, we showcase our thesis that this is why we feel it. Then the IC gives directions on the pre-IC members, whatever. The same constituents are the same. They give a direction on what are the other things that possibly needs to be done. And then in the IC, you will usually have the founders come in, pitch to the entire committee, and post the ICs where the decision on whether an investment has to go ahead or not is taken. So
what would be the duration of these IC meetings?
The IC meetings can stretch anywhere from an hour to 2 in our case. Depends on the stage, of course. Like a larger stage will have a higher time being spent, but yeah, an hour to 2, hour and 2 is like a good number. So for me, when those ICs are scheduled, I will have to work a lot in terms of doing a business diligence, doing a lot of maybe a financial digging, or in terms of just spending more time with the founders, etc. Right? So it tends to get longer hours at that time, but I can time it. I can like manage my day in such a way that those can be done within the 12 to 14 hours. If you procrastinate, it'll become like a 16-18 hour job again. But that's the visibility is something that I can manage in this side of the world. Unlike in banking, it was like regardless of whether you are you cannot like manage that time. It was a daily 16-hour kind of a job.
Which is why you left IB.
And I think
I don't know. Partly maybe.
Another thing that Chandranil kind of spoke about earlier was that part of our job is to like keep updating our thesis and kind of keep, because we are kind of looking at where the market's heading, right, and what makes sense. So even the fact that you might not be in office working, right, there is a lot of work required behind the scenes, right. So
makes
I
sense.
think that's so compared to like an IB, for instance, right.
So defining
your
is
work doesn't
like
end once you
very
leave the
important.
office.
Yeah. I mean, you can't define if that's work or not, but if you're meeting someone, just you gain some insights about
or
the
like
industry.
you spend your Sunday morning like reading like a 200-page research paper, right? Like that.
One time I had a board meeting which started at 3 a.m.
What are you saying? And ended at?
Because it's a SF based company.
Okay.
And 3 to like usually quarterly board meetings range from 3 hours. So 3 to 6.
Okay.
It's a semi sleep kind of a phase, right?
So you slept after 6 o'clock or?
I slept
No,
after
then you went to the office at 7.
I think that was like a bad day. Like I had to just like function on 3 hours of sleep. I did walk in at 9:30.
Okay, so you went to the office at 9:30.
So I did work from home that day, but still like I started working at 9:30.
Yeah, so turning on the laptop, sleeping, and then.
No, not really, man. I had like a founder meeting at 10, so I can't do that.
Okay.
I think one point I wanted to add on this about how we organize work. So I think the biggest contrast between IB or consulting or whatever versus VC is that here, as he said, Chandani said, there's nobody telling you what to do. I mean, it's very important to remain disciplined in VC because the distractions are multifold.
What kind of distraction?
Distractions meaning that okay, part of your job is taking founder calls. If you want, you can take 15 founder calls a week. But are those relevant? Right? मतलब वो number बढ़ाने के लिए आप कुछ भी करोगे. मतलब people might take that as a target or as a measure for productivity, but that's not really a measure of productivity. तो मेरे हिसाब से जितनी क्लैरिटी है आपके वर्क प्रोसेस में इन VC that's more important because it's very easy to take up work and keep doing the work. Any reading, any conversation might feel like work, but is it really work? You have to constantly be questioning it. So it's a very self-starter, self-motivational kind of job. And I think the biggest learning that I have had to face here is that here nobody's telling me what to do. I have to set up my own meetings. I have to figure out my own founders. I have to decide what to ask, what not to ask, because all you will get is guidance and some pointers here and there. There is no process, right? I mean, nobody's telling you कि ये 4 चीज़ check करो हो गया. क्योंकि मतलब इस बहुत unknowns होते हैं इसमें. It's very unstructured data that sometimes you have to tell the founder कि no, you give me this data, this is more relevant than what you give it.
Yeah. So typically, how much time would you spend with the founders usually before deciding कि ये founder या ये company में invest करना है? Any specific? I know
Again,
it's like
very subjective.
Yeah, but typically, what would be the average?
I mean, I don't think we will invest in any company before seeing the. See, I think let's talk in terms of how much time it takes to do a deal, rather than how many times you have to meet a founder. Right, and during that period, you would spend a considerable amount of time with the founder, and so would the rest of your team. So I think for us, typically, before we write a check or before we give out a term sheet, it's just a non-binding term sheet, which means that we are interested but subject to diligence. I think from the first founder meeting, that would typically take about a couple of months. Term sheet in some cases it might even be a month, but I don't think in any case except in the heady days of 21-22 was our term sheets typically given out less than a month, I would say. If the founder
term
is
sheets
very
were given in a week, the peak of 2021.
My God.
Yeah, so those were heady days.
First meeting till the term sheet, just 7 days.
Yes.
As low as 2 days as well.
Oh my God.
That was
an extreme situation, right?
And how much time does it take usually to wire transfer the money after that?
Yeah, so there is a long diligence that happens after that. So it depends on the stage as well. If it's a seed and the company has not been in existence for more than a year, the legal and financial etc. would be much lesser. So, but that will range anywhere from 4 to 8 weeks.
Okay.
If it's a seed, the larger the check size and the larger the longer the company has been in existence, that tends to increase. But anywhere like 3 months is like what you can anticipate.
Got it. Fair.
On an average.
Got it. Out of the three of you, one of you have done an MBA from Columbia, and both of you have done an MBA? No, right?
I haven't. Yeah.
So what are your thoughts like on doing an MBA and then getting into a VC? Like, is an MBA quite kind of like very helpful for getting into a VC? And about for the two of you, like, do you plan to get into an MBA or not?
So I mean, to answer your question directly, like no, right? I mean, like because you gotta like, I mean, even today, the main reason for I think doing an MBA is especially the network that it brings you, yeah, right? So with that network kind of is something you carry forward with you no matter what you do. And as we were discussing earlier, right, like when it comes to VC roles, there is no like one path that kind of takes you there, right? So fact of the matter is like I probably would have ended up here even without the MBA, right? Having kind of said that, I do kind of believe that, I mean, in general, if you get into the right program and you kind of do the MBA at sort of the right stage, although you can't time it, but the right stage in your life, it helps you evolve as a person in terms of both personally as well as professionally in your own approach towards things, right? Helps you figure out sort of, it gives you an opportunity to sort of reset and figure out where you want your life to go, right? And it kind of gives you skill sets that you never really kind of expect to learn, right? Just as an example, I took a class on like entrepreneurship sales, right, at Columbia. Zindagi mein I didn't think like that's a class that I would ever take, right? But the point being, when we kind of go out and sell the fund and raise capital from LPs, it's like I'm actually using things from that class, in this application, right? So these kind of small things make a difference, right? So that's kind of the only thing. So I don't think it's kind of necessary for VC, but is it helpful? I mean, it was definitely helpful to me, right?
Right, got it.
I think from an outsider's perspective and just seeing friends here, only the top tier MBAs are going to help you get into a VC. So if that is your objective, then go to the top tier schools. Any tier 2, tier 3 school will probably not help you unless you have a background suited otherwise to VC. So I think that is my view. So when it comes to India, I guess the top 4 or 5 IIMs, ISB maybe, globally INSEAD and the Ivy Leagues or some of the British schools. If you're able to get into those, then doors open for you in VC. But a general MBA from a normal school, it's very difficult to see that opening doors into VC. I don't think it helps in my view.
Makes sense. Got it. Cool. Last question before we conclude this. What is one thing that you hate about your jobs?
क्यों नौकरी से निकालना चाहते हैं?
Yeah, don't worry. I mean, ये तुम्हारे bosses नहीं देखेंगे because 18 to 24 is my ideal audience.
So I think for me it's not. I enjoy traveling and all of that as well. So for me, that for some people that might be a challenge because we travel for fundraising, we travel for board meetings. So travel at times becomes a bit hectic for me at least, because I manage like about 15 odd companies. Like last week I was in like 3 different cities for the entire week, right? And I just got back to Bombay yesterday. So for some people that might be a bit taxing. For me, since I'm okay with traveling, I don't find that. But at times it just gets a bit hectic. That's the only pet peeve I possibly have.
Yeah, you've learned to answer diplomatically very well.
I have to retain my job.
Yeah, that's a good skill to learn. Got it. Anything you guys, I mean, yeah, of course, on a lighter note only, but anything you don't like about the jobs?
Yeah, I think sometimes it feels like you have to force yourself to network.
That's a very good point.
Yeah, so I think it is important to an extent. You have to be in touch with other funds. You have to be in touch with founders. But sometimes it feels very, the events, so especially in Bangalore, for example, There's probably be a VC event every week in certain times of the year, and you'll find a lot of people turn up there, and sometimes it feels very transactional that you're going up to that guy. Both of you know why you're talking, right? Nothing wrong with it. It's a part of the job, but sometimes it can feel very forced. That's something I don't like. So I typically avoid going to a lot of events.
Okay.
I'll probably do one event a month.
And that's why you organize a lot of events at 1949, right?
Yeah. So that's something I don't particularly like.
Adil, for you.
I think as you mentioned earlier, right, the unstructured nature of the job is something that because there's always an opportunity cost no matter what you're doing.
Yeah.
And then in hindsight, you want to make sure that you're making the right decision.
Right. Yeah, that's a good point. And the exit opportunities from a VC fund would be what? Like, what can people do? अगर 2-3 साल या 4-5 साल VC में job कर लिया उसके बाद क्या कर सकते हैं?
I look at it like there are 3 ways possibly you can do it. One, you can go for an MBA from here. Right, most of the VCs do become like a launch pads for you to like go to one of the good B schools. The other is one, you can grow in the fund and like grow to become like a partner or something, right? The third one is you move out to either a startup as a part of strategy or some other team, or you can yourself start up as well. That's like how I see the exits possible from VC, right?
Right. Got it. Anything else?
I mean, it's also possible to move to another asset class like a private equity.
Yeah.
I mean, and what is also happening now is that a lot of funds that was taking to one stage are doing multi-stage, especially in a market like India, which is evolving is growing very fast, right? It's seeing a lot of capital inflow. So, for example, a lot of late-stage funds started looking at early-stage opportunities, say, in the past 2-3 years. So that opens up another world of opportunities for you.
Yeah, I've seen Tiger Global also, like first it used to invest in a lot of late stage startups, but now it is now started in Series A.
Yeah.
It did 2 seed companies also last year. So that is a shift which is happening.
Yeah,
Even
so
Westbridge Capital for that matter. They used to invest in growth stage, but now they've started Series A as well.
Yeah, so as the industry matures, it's very natural for funds to shift allocation. So that is also another opportunity,
right?
That I see.
Got it. Cool. Very interesting. Cool, guys. Thank you so much. This was super insightful. I hope I could do justice to your time. I think I took a lot of your time. I had blocked lesser than what I had promised, but I hope you guys had fun. And I'm sure like everyone who's watching this, like they're going to gain a lot of insights. And I've personally enjoyed a lot. In the future, I know whom should I reach out to if I am raising capital once you guys become partners and all.
You have our coordinates.
Yeah, but thank you so much once again. I hope you enjoyed too.
Yeah,
A lot of fun.
Thank you for
Thanks
having
a lot.
us. It was great.
Thanks a lot for having us.
Perfect. Thanks.